Hello, everyone, and good evening, traders. It's good to be back today. Welcome to today's live trading session. My name is Ambrose Ebuka, and this is my second live stream with you guys in July. And I want to start by saying thank you for showing up today. Now, whether you've been trading for 6 months, 6 years, or you're just starting out and trying the demo account, the fact that you showed up again today, or should I say tonight, if you're in West Africa, it means that you're serious about growth. We're going to talk about, some of the important strategies that you need to scale your trading to the next level. But beyond that, we'll also talk about something that is invisible on the chart. It's invisible on the chart, but it's loud in your results. And what that is your mind. Okay, but before I go ahead to talk about the details of today's sessions, um, go ahead and let me know your name in the chat and where you're watching me from. And if this is your first time, you can also go ahead and let me know in the chat that it's your first time joining an Octa live trading session. All right. So let me know your name and where you're watching me from. So, like I said, guys, while you do that, I'll just go over the disclaimer. Any opinion, news, research, prices, analysis, or other information discussed in this webinar or linked to this presentation is provided as general market commentary and does not constitute investment advice. Now, for those of you that don't know who I am, I'm getting to know you guys in the comments, so you can let me know your name. Let me know if it's your first time trading or your first time, joining an Octa live session. But let me get to know you in the comments. And this is me telling you a bit about myself. My name is Ambrose Ebuka. I'm 6 years deep in the Forex markets or the financial markets. I trade with precision, blending swing and scalp setups to stay consistently ahead in the market. Now, if you don't know what swing and scalp is, you get to find out in the course of this session. So it's very important that as you've joined, you stay with us to the end. Okay. And at the end of this session, I'll go ahead to reveal a promo code that can give you 100% bonus on your deposit. And that's just today. Now, my focus in terms of the pairs that I trade, gold, GBP, JPY, and USD, and I hit above it 5% accuracy, and also back test these pairs like clockwork to stay razor sharp in the markets. But again, guys, remember, let me know your name, where you're watching me from in the comments. Let me get to know you guys, and let's see who's watching us from the farthest distance before we get started. All right. And I was also saying that, usually in these sessions, I talk to you guys about some important key levels, some important concepts. But today we're also going to talk about your mind as well, because it shows in the results now. The truth is, you already know how to draw support and resistance, right? You probably already know how to find snapper entries and use a trailing stop loss. But why did you break your rules the moment you start making a profit? Why do you open one more trade even when your plan has said you should stop? Does it feel uncomfortable when your trade is even going well? That's also what we're going to be digging into this evening. The psychology of almost there, of almost being profitable, and why most traders blow their accounts just when they're about to break through. Now, I've blown up accounts in my early journey of the financial markets. I've had profitable weeks that turned to regret because I didn't know when to stop. It was just uncontrollable. And I know that feeling of sitting in front of your screen, in the middle of the night, and you're asking yourself, why did I do that? Why did I take that extra trip? If you've been there, it doesn't mean that you're not knowledgeable or you're not smart or you're weak. That's not what it means. You're just running into something that most traders never talk about. Your brain has not fully accepted a version of you that consistently makes it profit. That is exactly what we're going to be unpacking this evening. All right. So expect a lot. Expect an understanding of the economic calendar. I'll introduce you guys to zone trading. Just briefly talk about that. We'll also look at the dollar index and correlation with other pairs. We'll talk about the psychology of almost there, and then we'll have a Q&A session where you get to ask me questions, and I also get to ask you questions as well. So very important that you stay active because I'll be asking you guys questions. Now, in this session, I'm going to go ahead and also expose mindset trap that is called the upper limit problem. Right? I'll also show you some daily habits that rewire your brain to accept, and not just accept, but also sustain profit. Okay, so whether you're on this session watching live, commenting, or you're watching the replay, please do well to take notes, reflect, and be real with yourself. Because after this session, I want you to catch more than peeps. I want you to start trading like someone who believes that they are allowed to be profitable. Now, if you're ready, go ahead and drop some "I'm ready" in the chat. If you're ready for today's session, go ahead and drop some "I'm ready" in the chat. Someone said they can't hear me. What's going on? Someone is saying they can't hear me. All right, let me fix that. Give me a second, guys. All right, all right. Okay, guys. How about now? I think it should be. It should be now. Guys, let me know if you guys can hear me now. Uh, let me know. Let me know if you guys can hear me now, guys. Okay, guys. Let me know. Let me know if you guys should be good. Should be good now, guys. Someone's saying. Thank you guys so much for actually pointing that out. To be honest, thank you guys. And yeah, sorry about that. It just keeps glitching. But let me know. Let me know in the chat if you guys can hear me. And I really appreciate you guys for pointing that out. And if you ever, glitches again or reduces, just let me know, guys. Let me know. All right. Someone is still saying it's breaking. Guys, I need to be sure. Can you guys hear me? All right. All right. You can hear me. It's good. Okay, perfect. Perfect. Okay, just a quick, recap on, what I've been saying so far, right? I was trying to tell you guys that we usually have these sessions and I go over the chart, show you guys some really interesting strategies and steps on the technical aspect and even also the fundamental aspects. As you can see here, today we're going to be talking about the economic calendar. I'll show you guys zone trading that I use. We'll look at DXY, which is the dollar index, and its correlation with other pairs. And I would also talk to you guys about the psychology of almost there. Remember, I told you we'll talk about something that is invisible on the chart, but it's loud in your results, and that has to do with your psychology, or should I say, your mindset. Now, I was telling you guys, you already know how to draw support and resistance. You probably already know how to find, sniper entries, use a trading stop, break even, all that. But why do you break your rules the moment you start being profitable? Why do you open one more trade even when your plan said he should stop? And why do you sometimes feel uncomfortable when trading is going well? That is exactly what we're going to be digging into tonight. The psychology of almost there, and why traders blow their account just when they're about to break through. Now, in my personal experience or in my journey to being a profitable trader, I've had times where I blew accounts. I've had profitable weeks that turned to regret because I just couldn't stop. And I know that feeling when at the middle of the night, you just sit in front of your charts and you're asking yourself, why did I, overtrade? Why did I risk so much? If you've been there, it doesn't mean you lack the knowledge. It doesn't mean you're weak. you're just running into something that most traders never really talk about. And your brain has not fully accepted the version of you that consistently makes profit. And that's exactly what we're going to be unlocking tonight. So I'd urge you guys, whether you're live here, in the live chat, or you're watching the replay, make sure that you take notes, make sure that you're writing down, because after this session I want you to catch more than peeps. I want you to start trading like a trader that believes they are allowed to be profitable. Now if you're ready, go ahead and type "I'm ready" in the chat. If you're ready to get started, go ahead and type "I'm ready" in the chat. Let's look at who we have on this call today. Kristen K is here. Welcome, Kristen. Says it's his first time. Kelechi Ugochukwu, welcome as well. First time, welcome. Danex from Lagos, welcome. Adebisi from Lagos, welcome. KJ, first time from Malaysia, good to have you. Ozzy from Lagos, welcome, Ozzy. Ignatius, welcome. Peter from Lagos, first time joining, welcome to the session. Aziz from Lagos, welcome, Aziz. I think this was the part where people started talking about my audio. I can see all the messages on the audio. Thank you guys for pointing that out. Felix, welcome. Watching from Uyo, welcome. Let's see. Okay, I think that's pretty much it. Welcome, everybody. All right, welcome. So the session is going to last for about 45 minutes. And you can use the YouTube live chat to ask your questions during the webinar. I'll constantly check to answer your questions. I'll look at the live chat to answer all your questions. Okay. I see everybody's ready in the chat already. Everybody's typing, "I'm ready." So we're just going to go into today's session. Now, obviously, we're going to look at the economic calendar. Before we do that, I wanted to briefly introduce you guys to the zone trading strategy. Now, if you know what a zone trading strategy is, let me know in the chat. If you know what a zone trading strategy is, let me know in the chat, guys. Let's see if we have people that know what a zone trading strategy is. Or if you've heard about zone trading. Okay, maybe you don't know what it is, but you've heard about it, zone trading. What does it mean? If you know, let me know in the chat. Or if you've heard about it, let me know in the chat. So, zone trading basically, I'm just going to simplify it for you guys, right? It's just trading key or important levels in the market, right? Looking at what's going on in these levels and reacting to market action. Now, you're not basically looking to trade at that level, but you're looking at that level, identifying that level to see what the market does there, so that you can determine your potential action. Someone's talking about the mic again. What's going on? What is going on? Um, guys, let me know if it's good now. I have zero idea. Okay. All right. It should be good. Should be good now. Don't worry, guys. There'll be no more complaint about mic issues after today. All right. Ignatius is a beginner. Welcome. And thank you guys for actually pointing that out as well and for sticking around. You guys are amazing. Okay, so Christina says trading within demand or supply zones, which is still a key level, right? Now, what is included in the zone trading strategy? For me, I look beyond what I can see in the charts, right? I just created this framework that includes everything that you need to execute a trade. And the first one is your understanding of the market structure. Now, we do this in every session, so I'm going to ask you guys the question, right? I'm going to show you guys a chart.
I'm going to show you guys a chart. Let's say, let's go to the higher time frames. Then I think we should do the daily. All right, now this is the US 30 chart on the daily time frame. So let's say you open your computer, US 30, boom, and you see this. Where is this market headed? Upwards or downwards? Let me know in the chart. Without analyzing anything, you just open your chart, you see this. What's your first perspective of the direction of US 30 just by looking at this? Are we in an uptrend or a downtrend? Are we headed up or down? Let me know in the chat if you know the answer to that. Perfect. Upward, uptrend, upward. Now, traditionally, an uptrend would look something like this, right? But this is what I call a textbook definition of an uptrend, because most times you don't necessarily get it so clean and smooth like this. But the most important thing to identify in an uptrend is consecutive series of higher highs and higher lows. Consecutive, occurrences, formations of higher highs and higher lows. When you're able to spot that, at least two higher highs, two higher lows, the market is moving in an uptrend. All right. That's what you want to look out for. So if you said uptrend, that is correct. Another thing to also be mindful about is the time frame you're looking at this chart, because in the 15 minutes time frame you could see the market move like this, right? But that could just be a minor retracement in the 1 hour time frame or in the daily time frame. So you want to look out for the higher time frames to help tell you where this market is going. As you can see, we just pulled down from a downtrend, and now we've broken key levels. If you know the key level I'm talking about, you see that this key level, you can also start from here. As you can see, multiple tests, and we finally broke above that, right? Which also makes this point serve as our most recent support level, where the market is potentially expected to tap in or even tap down here before continuing in its upward trajectory. So the idea of explaining this to you guys is for you to know that understanding market structure doesn't necessarily mean you have to analyze before you see a trend. If you're able to perceive the market just by looking at it and say this is the direction, that's a good start of understanding market structure. The candlestick chart, the patterns, trends, ranges, supply and demand, all these make up market structure. And then the next thing you want to do, again, I'm talking about the framework now, guys, is to identify your key levels. The key levels can be identified with the trend line. The key levels are areas of supply, demand, support, and resistance as well. You can use the trend lines for that, as you guys can see. You can use the trend lines, you can use your horizontal lines. Trend lines would be this, right? I'm going to make it bold just a little bit. So this is what we call a trend line. Now, this knowledge, this information is very important, especially if you're a beginner trader. All right, so you can identify your key levels with trend lines, with the horizontal lines like this. That helps you identify areas of support and resistance. Now, I'm going to ask you guys a quick question in the chat. This level right here, what would we call this level? Is this a level of support or a level of resistance? Let me know in the chat. This level right here, this level, this black line that crosses here. I don't want to give too much information because you guys will get the answer from the information. But let me know in the chat. Is this resistance or support? Let me know in the chat, guys. Are we looking at support or resistance? This line. Let me make it a bit thick and also change the color. I don't want to do too much. So you guys don't. Okay. I know what to do. Yeah. So is this resistance or support? What level is this? This red line. Now you've seen that, I'm going to change it back. I see everybody saying resistance level, resistance level. Okay. So if you said resistance level, you're correct. This is resistance level. And if you don't know why, it's because it has this area resisted US 30 from breaking above it once, twice, the third time, the fourth time, and finally, boom, we had that nice break. Now, usually, when the more a market tests the level, the stronger it becomes. And when you get a nice break like this, it just signifies strong momentum, and that's why you're seeing this market come up here to also test this key level. You see why key levels are important in this market. Yeah, see, boom, broke out. You obviously, if you're trading this market for, if you're trading this market at this point, yeah, and you see that there was a break above this resistance level. Let's just play that a bit, and you see that the break has been sustained with a follow-up bullish momentum candlestick. What you do is to look to the left-hand side. You use what's happening in the left-hand side to know what's going to happen on the right-hand side. And then, if you look at the left-hand side, you see we have a swing here and also a swing above here. What does that tell you? On US 30's way up, we'll potentially test this point, and if we break it, we're testing this point, right? So if you're not used to backtesting, this is how you backtest, right? And while you're also backtesting, you should also forward test to create a balance. But again, you see, look to the left, the closest swing and the highest swing before they move to the downside. Areas of targets for take profit if you want to go on a buy. But if you said resistance, you're correct. This is a resistance level. Now, this question can be tricky, but if you understand it, you understand supply and demand, support and resistance. The resistance level, is it the supply zone or the demand zone? Let me know in the chat. The resistance level, is it the supply zone or the demand zone? Let me know in the chat, guys. Is the resistance level the supply zone or is it the demand zone? Let me know in the chat. Oh, I see someone say support for the previous answer. It's actually resistance. Support is below, it supports the price from breaking down below, right? But the question remains, the resistance level that you have here, is it a supply zone or a demand zone? Let me know in the chat. All right. Olufemi says supply zone. Christiana says supply zone as well. Okay. If you said supply zone, you're correct. Now, when you hear the word supply, what do you think of? You think of something being poured down, right? Limitless supply or supply in abundance or whatever it is they use supply for these days in sentences. But what it means is something being poured down, right? Something being given from above. So it's supplied, and that supply has to come from resistance. Supply can come from support. Support is the demand zone, and what does demand do in the forex market? It drives prices high. When there is high demand in something, let's say let's use fuel scarcity for example. When there's fuel scarcity in the country, you guys experience that a lot. But when it happens, fuel now turns to gold. Now, because there's no fuel in the country, the stations that have fuel would now increase their price because demand is now high, and then the price goes up. So supply zone is the resistance zone. All right, I just wanted to also quickly explain that. But for the key levels, trend lines, moving averages, you can use that for identifying key level. Fibonacci can come as extra support as well. And then the next thing you want to do after identifying your key level is to predetermine your entry and exit points. Now, I like to use candlestick confirmation for my final confirmation, right? Candlestick momentum rather for my final confirmation. Whatever it is I do in the market, whatever my analysis is, I like to wait for the candlestick to show me momentum or to show me a pattern before I go in. And the indicators that I use is the moving average, the RSI, and the Fibonacci, just for added confirmation if I want. But the idea is after understanding market structure, after identifying your key levels, you predetermine where you want to enter and also where you want to exit. A lot of times we just enter a trade and we don't even really care where we take profit. We look at the amounts that we're making and we're like, well, I'm up $100. I want to make $500 before I close. The market doesn't care about your goals, guys. I need you to understand that the market itself doesn't care about what goals you have. The market responds to discipline, consistency, patience, sticking to your plan, being persistent. The market doesn't care if you're waiting for your money to get to $500 before you close it, which is why your entry and your exit points have to be determined by the structure of the market, not what you feel you want to make. And you have to determine the point you want to exit in profit, the point you want to risk on that trade for your stop loss, even before entering the trade. That way, you don't have to get scared if the market goes against you. And finally, risk management. Risk management has to do with your risk to reward. Someone is saying they can't hear me. Guys, let's see. I think it's good. I think it's good, really. But let me know, guys. Let me know in the chat. So, risk management has to, I think I was in PowerPoint. Risk management has to do with your risk to reward, how much you want to risk on that trade versus how much you want to make in profit, your stop loss size, your position size for that stop loss as well. When you do all this, right, it eliminates emotional fear or, that emotional stress of, oh, I risked too much, and you start to make rash decisions. It eliminates all that. Guys, the main thing you want to have in this market is confidence and comfortability. And every single time you go against your rule, every single time you go against your plan, you lose a bit of that. What kind of traders is the zone trading strategy suitable for? I just gave you guys a quick illustration of what it looks like to identify zones, right? But it's suitable for every trading style. As you can see here, the day traders that like to open and close their positions in a day, the swing traders that like to hold trades for weeks, even months, the scalpers that get in and get out of the market within minutes and seconds, the position traders that hold trades for months and even years. It's good for everybody. The reason is because in every single time frame, you're going to find a zone, right? So let's say, for example, we go to the 1 minute time frame. Guys, you can obviously see support, right? You can obviously also see this with the trend line for the key level. So there is always a zone in every, and this is the 1 minute. In every time frame you go, there is always a zone, there's always a key level. This one is pretty obvious already. So that is why it's suitable for all trading styles. All right. Remember, guys, I'm going to ask you guys questions at the end of this session. I'm also going to take a question. So stay active, use the live chat, and I'll be checking. When do you use the strategy? During volatile sessions. What I mean by that is when two sessions are overlapping, right? So let's say the London session opened first by, when I mean open first, I'm saying when you wake up in the morning, right? Because even at midnight, Tokyo session is still active and then runs through the day. But when you wake up in the morning, by 8 a.m., 9 a.m., the London session opens. And then by 1 p.m., 2 p.m., the New York session opens as well. Now, each session lasts for 9 hours. What it means is when the New York session opens, it's going to overlap into the London session. It's going to open while the London session is still open, and that can create volatility when two sessions are open. Now, as a trader, you need volatility. Volatility is simply the movement of the market, how the market moves. If the market moves fast, it's high volatility. If the market moves slow, it's low volatility. But you need the market to move to give you money. And then also after major news events, this has to do with, you guys that trade NFP, CPI, the FOMC. The reason for waiting is because during the news release, the market doesn't really show you any direction. It just spikes, right? So you want all that noise to settle down, and then you can spot the zones and trade accordingly. If you're following, please let me know in the chat. If you're following, please let me know in the chat. If you're following, please let me know in the chat. So, quick one, we're going to just do a review on the economic calendar, right? And if you're just using this for the first time, this is the Octa economic calendar. The reason why this is important is because fundamentals, economic events, they drive prices, right? Just the simple news on unemployment rate can increase or decrease the value of the dollar. Just the simple news on the interest rate decisions can increase or reduce the value of the dollar. Just the simple news on, tensions in the Middle East can also increase or reduce the value of the dollar. And how do you stay updated? By using the economic calendar. Now, if you're just using this for the first time, make sure that your date is set to today. But if you want to look at other releases or other economic events for, different times, you can always click here. Make sure the time zone is set to your time zone where you are, so you don't miss out on the news when they are being released. And for advanced filter, you can include low just to get an information on all the economic events happening that day. I like to keep it at high, but today we only had one high impact event. If I just put it to high, you would see that we only had one high impact event today, right? But just for the knowledge, you can keep it at medium and low as well. So you just stay updated with what's going on, like the ECB Villeroy's speech. You can always click here to see who is speaking, what this news has to do with the euro, how it affects the euro. Octa gives you a definition on that. As you can see, this is, the big man in the European Central Bank is the governor of the Banque de France, right? Traders were listening for signs like, are they raising the interest rate soon? Are they worried about inflation? If he's serious about, or if he sounds serious about controlling inflation, it means they might raise the interest rate. And when that happens, Euro pairs like the Euro USD, Euro JPY, they can pump. All right. So very important that you pay attention to these events, the speeches as well. Since this one is a high impact, I'll just briefly talk about it. As you can see, definition of what it's about. You also have to pay attention to this section of the economic calendar, which is the actual, forecast, previous, and impact. Now, what this tells you is the impact just tells you the impact it's going to have in the market. It's going to have a low impact, it's going to have a medium impact, it's going to have a high impact, and volatility follows suit. So if you see low impact, you just know that this is not even going to do anything in the market, barely a ripple. It's not going to cause any movement. High impact would most likely cause a movement. Medium impact, just like the name goes, medium impact on the market. And then you want to look at the previous. What happened the last time this news was released? That's the previous. What are the experts, the investors, the economists, what are they saying? That's what expectations do they have? This is expectations. That's the forecast. And then the actual is the actual release, the actual number or report at the release of this event. And if you don't know what this means, harmonized index of the consumer prices, you can click on it. Octa gives you a definition. YOY means year over year. MOM means month over month. Are we together? Let me know in the chat if we're together. Now, why is this important? Why is the harmonized index of consumer prices important? You guys need to understand. again, if you look at the flag, you see this is the German flag, but it affects the euro as well. Germany is like the economic engine of Europe. If the inflation in Germany is hot, the European Central Bank will think about increasing the rates. But today, as you can see, the numbers came in as expected. So no serious movement. Euro would stay mostly calm, relating to this news. Maybe a small movement if people were expecting a bit worse, but if you're trading Euro GBP and Euro USD this morning, there was not really enough pressure to just make the market move wild. So there would have been no need to force a trade at the time. All right. We had also two more ECB speeches from Clipolone and Escrivia as well. And then we had the US initial job claims. Again, if you want to know who's speaking and what it means, you can always click and then you know who's speaking and what it means. Remember, you have to pay attention to what they're saying because sometimes they repeat the European Central Bank stance. But if one of them breaks the script and says something unexpected, the market is going to react fast. All right. So again, click on that to know what it means. We also had US jobless claims coming at 1:30 p.m. today. This was medium impact, but again, another thing to identify is the previous, which was at 233,000. The expected number was 235,000, and the actual was at 227. Now, in this particular news, if you look here, you would see, which is also an important area to note in the economic calendar. A larger than expected number indicates weakness in the US labor market and reflects negatively on the US economy and is negative for the US dollar. On the other hand, an increase or a decreasing number should be taken as bullish for the USD. Now, I'm going to ask you guys a question in the chart. Previous was 235, 233 rather. Forecast was 235 and the actual 227. Now, this news came in lower than the forecast and lower than the previous. Is this good or bad for the dollar? Let me know in the chat. If it's good, say good. If it's bad, say bad for the dollar. We had 227 actual. Is this good or bad for the dollar? Let me know in the chat real quick, guys. 35, 230, 233 rather. Forecast was 2. Previous 233, forecast 235, actual 227. This came in lower than the previous, lower than the forecast. So is this good or bad for the dollar? I'm not getting so much answers this time. I think it's because it's a bit conflicting. Because usually when it comes in higher, it's good. When it comes in lower, it's bad. But okay, we're seeing some goods in the chart. It's good for the dollar. What this means is fewer Americans are losing jobs, and that is a strong labor market. A strong labor market means the US economy is doing well, and the Federal Reserve may not reduce interest rates anytime soon, and that is bullish for the dollar. So if you're trading Euro USD, this data alone can push Euro USD down because obviously you're selling Euro to buy the dollar. All right, and then we had a couple more speeches and the business NZ PMI, which has to do with the New Zealand dollar, or which affects or influences the New Zealand dollar. This has to do with business. You can always click to know what it means and what this report would mean for the New Zealand dollar. It's going to be released by 11:30 today. So that is that for that. I think that's all on the economic calendar. All right, so key advice for you concerning the economic calendar. Don't trade every news, right? Pick the one with clear impact. Pick the one with confirmation from your charts as well. And always match fundamentals with technicals. Don't just buy Euro because, the Villeroy smiled and then you just buy Euro. No. Combine with technicals. Know your session. Are you London session? Euro, GBP, a New York session obviously would be USD. Focus on what is active and have a plan. Okay, I have a plan. If, let's say, excuse me, guys, if the initial jobless claims beats the forecast by like over 10K, as you can see, and the dollar is bouncing off support, I will sell Euro USD. Right? Just have a plan. This was an example I just gave you guys. Have a plan. Let me know if you guys are following in the chat. Let me know if you guys are following in the chat. All right. So I told you guys we're going to quickly talk about the psychology, about mindset today. While we've just done a review on the technicals, the fundamentals, we're going to also just quickly talk about psychology, because this is something that is highly overlooked in the Forex market. Now, if you stayed up to this point, you've done amazingly well. This is actually the part where you get to leave today's session very, very, highly impacted, with insights and very, very confident, right? Why you self-sabotage before you win. The psychology of almost there. Understanding this would unlock the mindset blocks that stops you from consistent profits. Kelechi Gochuku says he doesn't understand. Please let me know in the chat what you don't understand and I'll explain for you. Okay. Now, this is not about strategies or indicators. It's about why you know what to do, but you still don't do it. How many of us have been there in the Forex market? You know what to do, but you just don't do it. You know that you're not supposed to over leverage or risk so much. You know you're not supposed to trade without confirmation, but you still do it. If you've been there, let me know in the chat. Because this session is going to help you understand why you break your rules, why you overtrade after one good trade, and even why you blow your accounts when things start going well. But let me know in the chat if you've been there. Amazing. Now, here's the thing. This doesn't mean that you're lazy, right? Being in this situation doesn't mean that you're lazy. You're just hitting what I would call a mental ceiling. If you've seen profit before and then you still held the trade until it turned red, it went back. If you've made back your losses and still lost everything again the same day, if you've been in these situations, that is not bad strategy. That's self-sabotage. And this is where we get to talk about what I call the upper limit problem. Your brain is uncomfortable with, unfamiliar success. Let me make you guys understand better. If all you've ever known is, daily hustle, struggle, then when trading starts feeling like you understand everything and you're doing well, your brain would unconsciously create chaos to feel normal again. Okay, Kelechi says he doesn't understand indicator on when to enter and leave the market. Which specific indicator are you talking about? Let me know. But I'll answer that at the end of this session, okay? All right. So most of the time we've been conditioned to believe that, if you struggle, or suffer in the market, then you get reward. And if the money came too fast, you would start to feel, what's going on? Most traders don't also realize that they are carrying what I call emotional baggage from, past losses, expectations, scarcity, all these things. So I'm going to show you guys some signs that you're self-sabotaging without knowing. Now, if you do this, you just know that that's what you're doing. You just know that you're self-sabotaging. But the good thing about today's session is, while we identify the problem, I'm also going to provide solutions. So you're not going to leave here empty, okay? Keep in mind that whatever it is you learned today, by being here and by staying up until this point, you have succeeded in covering 50% of that journey. The remaining 50% is going to be determined by what you do when you go back, when you leave this session, after this session, if you want to go back scrolling through TikTok and Instagram and just, not learning, that's going to have a reflection on your trading account. But if you want to put your head down and relax and learn and get this right, it's also going to have an impact on your trading results. So you decide. You've done 50%, you've been here, you decide. Now, if you move your stop loss, you say, oh, just want to move my stop loss just this once, and then you find out that you've moved it more than once, the next thing it becomes a habit, self-sabotaging. You make a profit, 3 trades, and then you just take one unnecessary huge trade that wipes everything. That's also self-sabotaging. When your trade is going too well, you start to feel bored and anxious because you're not used to that. You're used to the thrill of the emotional stress and everything. It's also self-sabotaging. Now, if you've been here, say I have in the chat. Go ahead and type I have in the chat. If you've been in these situations, any of this, even if it's one of it, even though I know that most traders usually go through all 3 of them, but just let me know in the chat. Say I have, or you can type I have. I'll give you an example. Let's say you've made 15% this week, and you made it on a Monday, the first day of trading. And your plan says, obviously, stop. You have a plan that tells you 15% a week is really good, but you open more trades out of boredom and boom, draw down, blown accounts. If you've been there, go ahead and say I have in the chat. Someone said, Kuku mentioned my name. You see, a lot of times we think our problem lies in strategy, but it really doesn't. And that's why you see traders strategy hopping. In 1 month, you've used 5 different strategies. You have to give one time to work. Strategy is not really the problem. It can be the problem, but it's not really the problem. I have, you've been there. Awesome. Like I said, this is good because we identify the problem and I provide a solution, also based on experience. Now, how do you break the cycle of self-sabotage? First, you have to recognize your patterns. What triggers this chaos? Now, if you made it to this point, this is the heart surgery part of today's session. Okay, it's not about the fix is not going to be just something that you do with a magic wand and you say, oh, how does Merlin say it? One of those, magic words and abracadabra, boom, everything is done. No, it's about understanding the emotional patterns that keep you stuck in a loop. You make a little profit, you overtrade, you lose it all, start again. That is a loop. So how do you break this cycle of self-sabotage? You have to recognize your patterns. What triggers your chaos? Most traders are not even aware of what they do before things go south. For example, you make a 10% gain on Monday, like I said, you feel good, but instead of stopping, you start to think, oh, let me just double it before New York session ends by 9 p.m. or 10 p.m. And then you open a bigger position, you ignore your rules, and boom, you're back at break even or even loss. That happens because of emotional pressure to win more. It's not strategy. You're no longer looking at the charts. You're no longer trading the charts. You're trading your feelings. So what you want to do is you want to start journaling. You want to start writing, even if it's just a notepad on your phone. Before you enter the trade, why am I entering this trade? After you make a profit, how do I feel right now? If you make a loss, what did I learn? This helps you build emotional awareness. It's your first step to change. The next thing you want to do is to set process goals, not profit goals. How many of us have come into the market and we say, well, I want to make $50 today. I want to make $100 today. This week I'm going to flip $100 to $1,000. Beginner traders come into this market and they often set those kind of goals. Oh, I must make, $100 today. I want to flip this to that. That's dangerous. Why? Because you start forcing trades just to hit the target. And then when the market doesn't obey your timeline, let's say that week is gone and you've not flipped that. As a matter of fact, that your $100 that you want to flip to $1,000 has turned to $20. You start to panic and you start to violate your rules. So I'm going to give you guys a better goal structure. Write down, I will take 2 high probability setups today. Now, this is not I'll make 20,000 or 5,000 or $1,000 in a week, or no. You're looking at process goals, not profit goals. I'll take 2 high probability setups today. I'll stop trading after 1 win, 1 loss. You can use something like that. You can structure it to a way that fits your risk tolerance. I will exit the market once I reach 3% drawdown for the week. With or I'll exit the market once I reach 3%, 4%, 5% profit rather for the week. These are process goals. Let's say your plan is to take only London breakouts, trade in the London session, and then you scalp GBP USD, you've hit your mark, you've made your profit. Now New York session starts to give you some, volatile vibe, and then you get a FOMO. You know what FOMO is? Fear of missing out. And you enter again, even though your setup is not there, even though you don't even know what's going on with, the dollar at the time. You just enter. What happens? The probability of giving back your profits become increased. Now, this is what process-based discipline prevents. The next thing you want to do is to build emotional tolerance for success. Now, this might sound strange, but there are a lot of traders that are comfortable with peace. After a good week, you start feeling like, maybe I didn't work hard enough for this gain. I should have pushed more. And then what happens? You overtrade and wipe the account. And that's what I was referring to when I said upper limit behavior. You're not used to things going smoothly, so your mind creates chaos just to feel normal again. Now, your job, if this happens to you, your job is to normalize being profitable. Learn to say, it's okay to be done for today. Profit is profit. Does it apply also to swing traders? Yes, it does. Talk about it. Don't trade in isolation. Many traders, especially Nigerian traders, are self-taught, and obviously because most times you you want to learn from a mentor and they call outrageous amounts for you, and that's why the Octa Broker YouTube channel is here for you, and also the Octa Nigeria Telegram channel as well. You get mentorship here, you learn here, and then you join the community. So talk about it, because it can hurt when you lose. You just start to spiral. You start to think, oh, I'm not good at this, maybe trading is not for me. But when you're in a group, you're in a community, and someone says, oh, I also lost that too, or I also had a drawdown, just market, and just me, you guys connect, you guys share ideas, and you're back on track emotionally. So after this session, please use the link that would be in the description, or the link in the live chat to join the Octa Nigeria Telegram chat. Attend the sessions that we host. Ask questions. You see, trading is personal, but growth is collective. Now that you've understood this, now that you've identified the emotional patterns, I'm going to give you a daily routine that can reshape how you think, how you trade, and how you grow. So these are practical daily habits to rewire your mindset. A morning affirmation, kind of like a mindset reset. You say this to yourself before you go to the chart. You can say, I don't chase profit. I follow process. It is safe for me to be consistently profitable. My trading journey is not a race, it's a rhythm. It's not a sprint, it's a marathon. All right? Because most times, we're just so used to no pain, no gain. So when something like trading offers, results, your mind starts to fight it. And using this, repeating these new truths, telling yourself this every day helps you rewrite that script. If you're following, please let me know in the chat. If you're following, please let me know in the chat. All right. The second thing would be end of day reflection. Not just recording profit, recording losses, but also record behaviors. Ask yourself, did I follow my plan today? What tempted me to overtrade? What was my emotional state after my first profit? Let's say, for example, you made $50 from gold and then you give back $20 trading GBP, JPY. Instead of beating yourself up, you can write down in your journal or while you're reflecting and say, I overtraded after my first win. I felt greedy, not strategic. When you do these things, guys, it trains emotional intelligence. And emotional intelligence is a trader's most valuable skill. The next one, don't trade to prove a point, trade to follow a plan. This one is very important for Nigerian traders that are used to proving themselves. Okay, your friend probably doubts you, or you've had a few losses and you want to show them by flipping your next account. That's not a good move. If you're trading from emotion, anger, pressure, pride, it leads to impulse trades using oversized loss and blown accounts. So you want to flip your mindset. You're not in competition with anybody. Your only goal is to execute your system. Your only goal is to be better than you were yesterday. And create a cutoff rule, which is the final one. Have a rule that says, oh, after 2 trades, 3 trades, I'm done. Once I hit my daily limits, profit or loss, I shut down. Why should you do this? You're protecting your future self. When they say discipline, 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 it's not about having the strength all the time. It's about having systems that save you when emotions kick in. I'm talking about emotions. You also have to recharge your emotional bank. A lot of traders burn out mentally and emotionally. So if you want to recharge, if you've had a good week, reward yourself. Not with more trades, but with something real like food. You can go to a spa, have a game night, like reward yourself. All right. So with this, guys, I believe that you have been able to understand how to manage your emotions and how to train your mind psychologically for success. Remember, you're not having multiple drawdowns because you lack knowledge. It's because your mindset haven't caught up to your potential. When you look at the charts, it's not just numbers, it's emotions, it's pressure, background, pride, fear. When you master your mind, the money follows. All right. Now, if you haven't already, please go ahead and download the Octa trading app. It offers a wide range of trading instruments with low spreads, fast execution, and zero commissions. It also has various educational resources, 24/7 customer support, and a strong commitment to funds and data security. Now, if you enjoyed this session, go ahead and let me know in the chat. If you enjoyed the session, most importantly, the psychology aspect of it, go ahead and let me know in the chat as well. If you made it to this point, congratulations. You get to see the promo code that gives you a 100% bonus on your deposit. The promo code is Ambrose E100. All right, Ambrose E100. That's the promo code that gives you a 100% bonus on your deposit. You can open the Octa Trading app or visit the official website, go to your profile and find the promo code section in the menu. Type in the promo code and click on activate. You make your bonus, you make your deposit rather, and enjoy your bonus. Remember, there's a certain amount or a certain volume that you need to trade to be able to withdraw your bonus to your bank account or to your trading account for more trading and more profit. Now, key takeaways from today's session: analyze trading instruments to understand how they behave under various market conditions. Review your actions and reflect on your decisions to identify what worked well and what can be improved. Keep up with the latest market news and updates. You can use the Octa Trading app for that. Also, the economic calendar can help you keep up with the latest market news as well. Use educational resources like these live sessions to enhance your understanding of trading strategies and tools. Right about now, guys, I can take your questions. We've come to the Q&A session of today's session. So I'm going to take your questions. If you have questions, please let me know in the chat. If you've got questions, please let me know in the chat. If you've got questions, guys, please let me know. And if you don't have any questions, I'm going to ask you guys some questions so you can answer. If you have questions, you can also ask in the chat as well. But my question to you guys is, what is one thing that is the most valuable thing that you learned from today's session? Let me know in the chat. What's the most valuable thing that you learned from today's session? Let me know in the chat. If you don't have any questions, you can also answer that for me. If you've got questions, you can ask me your questions in the chat. All right. This is from Kilichi. Which is better for a beginner using a demo account, MT4 or Octa Trader? I would say Octa Trader, to be honest. Guys, have you seen Octa Trader? Have you seen Octa Trader? Especially the space section where you get to receive feedback from experts, telling you what's going on in the markets, what they see. And the interesting thing about space is whatever it is you see here, you can literally copy it to your chart. Boom, and you can see everything that was here has come here. USDC AD. You see? Do you see that? Octa Trader has more advantages. You can also trade, stocks here. It's more flexible, to be honest. We also have the AI pattern feature that helps you identify patterns as well. You can see all the channels from the experts, get your information. So I would say Octa Trader. I want to run away from gold. How can I do it? Why are you running from gold exactly? What's going on? Why are you running from gold? I would understand why you're running from gold if you're a beginner trader, because the volatility can be much. You may not be prepared for that. And gold doesn't really move like other pairs in terms of whatever pattern it is you're learning. Gold can be tricky with all those chart patterns. So the main way I would say you can trade gold is by understanding supply and demand, and that's it. And fundamentals as well. So instead of running from it, you can just learn how to trade it, right? But if you really, really, really want to stop trading gold, just focus on other major pairs. You can start with Euro USD, GBP USD. When you understand that, then you can come back to gold. Trying to trade using, this is from Precious K, trying to trade using support and resistance, but struggling to find proper confirmation. What can I do? So with support and resistance, right? One of the ways I'll tell you you would be more confident in trading it is if you use the higher time frames. The market respects those zones on the higher time frames more than the lower ones. All right, start from there, start from the higher time frames, and make sure that you're not just trading off support and resistance. Look at the trend. What's going on with the trend? Are there any economic events that will be released at the time you're trading? Because sometimes an economic event can spike you off the market. So those are some of the ways that you can, identify good entries with support and resistance. And you can use, for added confirmation, candlestick momentum. So I swing. This from Prince. I swing, but I usually go for 1 to 2 risks to reward. Is it poor? No, it's not. 1 to 2 risks to reward is good. It's good. But with swing trading, just know that your profits won't be coming as fast, right? Your profits won't be coming as fast. And the 1 to 2 you're talking about also depends on how much is that 1% and how much is that 2%. Okay. So for some of the things, this Kelechi says, can one use phone or must it be a laptop? You can use phone for Octa Trader. You can when you're creating your Octa Trader account or your trading accounts, when you have the option to choose between MT5 or Octa Trader, you have access to all these things here on my screen. even with your phone, if you create an Octa Trader account. Just make sure you choose Octa Trader when you see configure. Okay, for the things that you guys learned, if that's all the question, okay, I'm sending the question. Can I use Octa if I don't live in Nigeria? Yes, you can, but there are certain countries that you would not be able to use it. For example, like in the US. But if you don't live in Nigeria, you can still use Octa. There's just a few countries like the US that you'll be able to use. Okay. But you can just type the country in the chat. Let me know if, and I'll tell you if it works there. All right, no more questions. Okay, so guys, let me know in the chat what's one valuable thing you learned today. Oluwasegun learned about emotional sabotage. Precious learned how to better manage my emotion sabotage. Okay, good. Solomon learned to have a plan before trading. Christiana, never to trade fundamental blindly without technical analysis. Blessed learned about economic calendar and how to utilize it to place your trades. Amazing, guys. So, we've got one more question. The numbers on the side, yeah, these are just the exchange rates, the ask and the bid price, right? These are just the rates, the buying price, and the selling price. This is the price you're buying if you want to place a buy trade. This is the price you're selling if you want to place a sell trade. All right, guys, if you have any other questions or you're watching this after the live stream has ended, you can always ask these questions in the chat and we'll get a response via comment. All right. Right about now, we have come to the end of today's session. Please take a moment to fill out our survey. Your feedback is essential for us to improve our future webinars. The survey would only take 1 minute of your time. You can scan the QR code that you can see on the screen, or you can use the link in the description to, fill the survey. Now, before I go, I want to leave you guys with this. Every trade is a stepping stone. Whether you make a profit or you don't make a profit, each experience is shaping you into becoming a better trader. So stay committed, because one day you look back and realize that every mistake, every lesson was building your success story. Thank you guys for joining today's session. I'll see you guys in the next one. Peace.